Markets closed Thursday in the mixed territory as the investors juggled weaknesses in the United States technology shares. Broad-based losses across the Latin America are seen, and the cautious trading in the Europe and the whole Asia is also witnessed. The volatility indicator also ticked higher, reflecting the unease over the monetary policy, economic growth, and the ongoing geopolitical tensions. The United States market tech sell-off also leads decline. On the Wall Street, the Dow Jones Industrial Average inched up just 0.02% to reach 44,922, supported by the defensive blue chip stocks. But the overall tone was negative. The S&P 500 slipped 0.59% to reach 6,400, dragged down by the declines in the technology, consumer, discretionary, and the cyclical sectors. The Nasdaq is also composite, heavily weighed towards the mega cap tech stock, fell 1.4% to reach 21,300, profit-taking hit with the high growth names amid the concerns that stressed valuation could falter in the higher for longer interest rate environment. Also, the small cap also struggled. The Russell 2000 dropped 0.7% to reach 2,200, reflecting pressure on domestic focused firms more vulnerable to the credit and spending conditions. Signs of the investor cautious were also visible in the CBOE volatility index, which rose nearly 4% to highlighting the growing demand for the downside protection ahead of the upcoming inflation data and the fresh commentary from the Federal Reserve officials. Analysts have also noted that while corporate earnings have held up, sticky inflation and a robust labor market could also push the Federation to the delaying of the rate cuts, the limiting of the further equity gaining after a strong first half of the 2025. Canada, the commodities drag on the stock. The north of the border, the Canadian market also mirrored the United States weakness. The S&P TSX Composite Index fell 0.35% to reach 27,823, while the S&P TSX 60 slipped 0.15% to 1,652. Losses were also concentrated with the energy and the mining stock, pressured by the softer crude oil and copper prices. Strategists also emphasized that Canada's resource-heavy market remains sensitive to the global commodity demand, particularly from China. Ongoing troubles in the China's property sector have weighed on the industrial activity, dragging down the prices for the base metals. The commodities oil hold nearly year low. Commodity market were subdued with the WTI crude oil settled flat at the $61.77 per barrel, near the bottom of its 52-week range, that is $55 to $79. The Brent crude was also unexchanged, while the $64 also trending closer to the lower end of its range. Oil remains caught between the weak demand signals, especially from the China, and steady supply from the OPEC Plus producers. At the same time, the geopolitical risk is also there in the West, with the shipping disruption, with the price support, and also a